Good afternoon and welcome to another edition of the CannaList Conversation. We are here today with Alan Brochstein of New Cannabis Ventures. Alan, how are you?
I'm doing great. Thanks, Mike.
Give us a little bit of background about New Cannabis Ventures.
Sure. Well, so I guess I should start with the not predecessor, but what preceded it, which was 420 Investor. And that's kind of where I made a name for myself in the space. It was 2013 and early 2013. And I was an independent analyst working with a handful of small to medium-sized institutional investors. And I had a couple of other things going on as well. And I stumbled into the two facts that I was unaware of. Number one, that Washington and Colorado had voted to legalize in November, just before that. And number two, that there were actually publicly traded companies that were supposedly cannabis companies. And so I was a prolific contributor at the time to Seeking Alpha. And I just stumbled across this article about this really scammy company, and it piqued my interest. And there was no looking back after that. And I ended up spending several months doing due diligence on the handful of companies that were trading back in early 2013. And really came to the conclusion that only GW Pharma was really a solid company. But I also spent time learning about the promise of medicinal cannabis and learning about the social injustices and things like that. So I really ramped up, and I had a subscription service for people interested in publicly traded stocks. And some of those people and some of my readers at Seeking Alpha were kind of pushing me towards focusing on the cannabis space. And in the summer of 2013, when Sanjay Gupta did his weed documentary, the light bulb kind of went off that finally a mainstream person was really embracing medical cannabis. And then the Cole memo hit a month later, and that's when I launched 420 Investor, which continues to this day. And that's all about helping individual, and I have some institutional investors, to really understand the publicly traded landscape better and to give them ideas and news about what's going on. You asked about New Cannabis Ventures. I followed 2 years later, and it kind of leveraged what I'm best known for at 420 Investor, which is taking a lot of information and distilling it. And I think the cannabis industry suffers from too much information, and you have all this media out there that every little thing that happens is some big news. And so if you're trying to follow the space, it can be very challenging because you get bombarded by things that are not important, companies that aren't real news about them, for example. So we decided, my partner Joel and I decided in 2015 to launch New Cannabis Ventures as, totally open to the public, no registration required, no fees, anything. So public facing, supported by ads. And that's been our model since then. We've worked over the years, and initially it was only private companies could advertise, but we were able to work through that. And so beginning in 2016, a year later, we began working with public companies, and some of them we continue to support to this day. So many have come and gone along the way. But the idea is really simple. It's to be like kind of the Wall Street Journal of the cannabis industry, and to provide very deep coverage of the space. And what we do at New Cannabis Ventures, it's about 80% curated content. The curated content is basically, it's as simple as rerunning press releases, but they're enhanced. It's not just cut and paste and that's it. They're thoughtful titles, good imagery, tagging, and a lot of things that really can help people to understand the story over time. And those curated press releases revolve typically around capital raises, financial reporting, and M&A. Those are the three main topics. And then the other 20% of what we do is proprietary, and that tends to be, we do about 2 interviews a week. These interviews are with both public and private companies, sometimes investors, and the people tend to be North American, but a lot of them are Canadian, so it's not just US centric. And so that's one piece of content. The other one, we have 7 indices that we're running, and so each month we'll write an update about the indexes. A third area is that same monthly review process. We have the cannabis revenue and profit tracker, and there we list over 50 companies sorted by revenue, both in Canadian dollars and US dollars, and we'll write a review each month of that. And then another piece of proprietary content, there's several markets where I'm interpreting data as it comes out, and those markets are Illinois and Michigan, which both those states issue monthly revenue data. And the other one I do is Canada, which StatsCan puts out Canadian. And so that's the type of content we run. And then there's one other piece I guess I should mention on Sundays. So we have a policy of pretty much, it's non-editorial. People that come to our site shouldn't know if it's a client or not that the news is about. And we don't tell people buy this stock, sell that stock. I do that for 420 Investor, of course. But New Cannabis Ventures, the only real editorial thing that we do is each and every Sunday. Sometimes it's a struggle, sometimes it's really easy. We publish a weekly newsletter, and each newsletter has a piece of what I would call editorial content. And it's not so much editorial as it is, I would say, educational. But what we're trying to do is inform our audience in a very first-person voice, and to tell them, what we think lies ahead that might be important, or things that people may be misinterpreting or misunderstanding. So each week we're writing about that, Mike.
And then when you talk about the public companies, these are typically Canadian companies, because we don't have US public companies yet. We have companies
Oh yeah. I mean, as a matter of fact, that's been one of the great changes over the last few years. So
okay,
when it all started,
because I thought without federal legalization, they can't trade.
So they do trade. They just don't trade on the NASDAQ or the New York Stock Exchange. Okay. They definitely trade. So just so your audience understands the landscape, in 2013, most of these companies were masquerading as cannabis companies. GW Pharma was an exception, but it actually listed on the NASDAQ in 2013. And that's been the only plant-touching biotech to do that. There've been some synthetic cannabinoid companies that have made it to the higher exchange, but it was that, for the next few years, it was really these stocks traded on the OTC, and so real American cannabis companies didn't really trade. So you were definitely accurate then. It was a bunch of wannabes, and so a really big change was up in Canada. We started to see the CSE and then the TSX list these Canadian LPs, and those companies in 2018 were able to begin to get NASDAQ and New York Stock Exchange listings. But a big change was, so the CSE had started to list American companies, but it wasn't really until 2018 that the largest US cannabis operators went public through the CSE for the most part. And a couple of them through SPAC process through the NEO, but and so they have traded since then on the OTC. They're unable to list on higher exchanges, which creates just a whole litany of issues. But even with that said, in the United States on the OTC, they trade millions of dollars a day. And there's also a ETF now that invests in swaps of these companies, and that trades publicly, and that has over $1 billion in assets. And some of those position sizes are $100 to $125 million of those companies. So it's an indirect way for anybody that wants to participate.
Yeah, I guess I was focused on NASDAQ and the other stock exchange.
But we have ancillary companies, and so that's become a big part of the market. And you have, Scotts Miracle-Gro's been in the space for quite some time, trading on the New York Stock Exchange. And then you had IIPR go public as a REIT back at the end of 2016. Then you had Grow Generation uplist to the NASDAQ, and Urban Grow uplist to the NASDAQ. And we've had new companies like Hydrofarm, some other REITs. There's actually a good dozen or so ancillary companies that are in the United States trading on these higher exchanges.
Yeah, because I know there's a couple of foreign companies trading on the NASDAQ, but because they're legal where they are.
Right, the Canadian LPs and some
Israeli
Latin
companies too.
American companies, things like that.
Yeah. So, if you were in this space, 2013, 2015, then you experienced the green rush,
Right.
right? And like you said, a lot of these companies weren't truly cannabis companies, they were other things. What was that like?
So it was pretty bizarre. I mean, the best example I can give is how the BBC wanted to interview me in early January 2014 when Colorado legalized. I was like, the BBC interviewing me? This is insane. But so, it was tough. I was in an awkward position of really supporting the industry and its mission, but also wanting to protect investors. And so when we came into the year, I was warning people, these companies are bogus, but there was so much demand for the stock. It sent them up like 10 to 20 times. And of course, things like that always end poorly. And so my kind of mission was to keep my subscribers aware of how the future would change, how we would get legitimate companies trading publicly. And so a lot of my focus was on Canada once those companies really began trading in 2014, 2015. And, once 2018 hit, things got a lot more exciting. I had been asked to speak at the CFA Society in Houston several times. And I always said, you know what, it would be a waste of people's time. It's just not time yet. But in April of 2017, I was able to accept the invitation. And I remember it like it was yesterday. I said, I've turned this invitation down for a few years now. And I'm not telling you to buy cannabis stocks in April of 17, but what I'm telling you is, as an investor, these are but finally on the radar for something that can become investable, and they have. And so as a CFA, when I first showed up, being a CFA didn't really help. Having a bullshit detector helped. And then as the years progressed, still having a CFA didn't really help because it was still more venture capital and not so much. These were publicly traded companies that should have been private, but there was a land grab and race for capital, and being public helped on that. But I have to say, in the last 2 years, 2020, 2021, there have been a lot of analysts that have come into the space covering the American companies. There are there's services out there that have all the consensus estimates and everything. Companies are reporting positive adjusted EBITDA, some companies positive net income. We're talking about companies that are both ancillary and American direct cannabis companies. So it has become to the point where having my CFA is helpful. You can really be an analyst and start to talk, look at earnings projections and talk about valuations in a very meaningful way. So it has changed a lot.
And so where is the market now? I mean, we're seeing a lot of M&A activity, so.
Yeah. So this year has been the mirror of 2020. 2021 started off great and is ending horribly when it comes to the stocks. 2020 started off horribly and ended great. Now, what happened in 2020, at the end of 2019, the vaping crisis was really wreaking havoc. And I use the words capital crunch over and over. And the reality was capital available to our industry totally dried up. And then the pandemic hit, and it looked like lights out for a lot of companies. And the pandemic turned out to be a blessing in disguise because essential services is what these companies were declared, and they were able to do things like curbside pickup and delivery. And all of a sudden, e-commerce started to be a factor. And then on top of that, you had more and more states and also municipalities seeing that cannabis would help with jobs, for example, and tax revenue. So things really lined up as 2020 played out, that back half, and stocks went up a lot. And we had follow through into 2021, but as usual, things got ahead of themselves. And I was pretty good at calling that out pretty much at the top for my subscribers. What I wasn't so good at was just predicting how long and how deep this correction from that action in 2020 would be. So where we find ourselves right now is a lot of these stocks have pulled back to where they were in the fourth quarter of last year. So better than they were in the spring of 2020 by far, but still way down from these levels in February. So what's going on is a little bit of technical and a little bit of fundamental. And so one of the things in 2020, we saw very robust cannabis sales growth. And, you know, it was hard to tell at the time how much of this was due to e-commerce, how much of it was due to things like, well, people had extra money, they couldn't go anywhere. So they had extra time, extra money, and they had a lot of anxiety. So they were consuming a lot of cannabis. So there was a little bit of a shift out of the illicit market due to the e-commerce factor, I think, and maybe some focus on safety. But at the same time, there was definitely some one-time factors. And so this year, we've seen some very tough comparisons over the last few months. There's glimmers of hope that that's improving, but still, there's been some slowdowns. Also, I would say, you know, part of the excitement last year was that there'd be more state legalization in the fall elections. In November, we saw the most important state, New Jersey, of the 5 that voted. But here we are at the end of 2021, and there's no date set yet. So a lot of the publicly traded companies are set to go in New Jersey. And this is very different from other states that have legalized. Some states have had this where the publicly traded companies are involved, but New Jersey, it's almost 100% large publicly traded cannabis companies. They're in their nascent medical market, with some of them holding inventory waiting to sell. And then we saw New York legalize, but oh, by the way, not till 2023. Virginia legalized, but oh, by the way, not till 2024. Hopefully that'll be a little earlier. So it's been a year of delays. And then, of course, the California price implosion. Most of the larger MSOs aren't that involved in the state. Some aren't involved at all. So it hasn't wreaked as much havoc necessarily on those companies. There are some companies that are focused on California that have seen their stocks come down 80% from the peaks earlier this year as prices plunged there. So that's been an issue, but it also seeds some uncertainty, like, well, if it can happen in California, maybe it'll happen somewhere else. So it does weigh on sector sentiment. And then the final point I would make, so one of the reasons why people got so excited earlier in the year was the hint that there could be federal legalization. I've been saying for a long time, federal legalization is going to take a long time. It's complex. The issues around taxation, around interstate commerce, around social equity, these are in a regulation by the FDA, for example. These are very complex issues, and you already have all these states doing things differently at the adult use level. And so to kind of rein all that in and have a unified standard is going to take a while. And we saw in Canada, Justin Trudeau was elected on a platform of legalizing for adult use, and yet it still took 3 years. They were already federally legal for medical, and it took another 3 years till that first gram was sold. So what has happened? So a lot of people showed up thinking we're going to legalize tomorrow, which never was going to happen. But it's been worse than that. Not only is it not happening, the Democrats kind of had this opportunity to do something. The Senate has done absolutely nothing with respect to even talking about cannabis. And so finally, we kind of had control of the Senate, not really, because not 60 votes, but Chuck Schumer and the others, they took an approach that I was critical of from day one, which is trying to go big and get everything done in one piece of legislation. And to do that when you had only a nominally supportive president, he's really not for cannabis legalization. So they blew it. They had an opportunity to be incremental and take the ball and move it down the field. Instead, they threw a Hail Mary and it didn't work. And so that has left people worried about things. That legislation had high taxes and it had a high regulatory burden with FDA, which again gets people nervous because the US cannabis industry status quo is working really well. There have been these delays, like in Illinois, there's been some delays on dispensary license. So look, it's the cannabis industry. It's 2 steps forward, 1 step back all the time. But when you start throwing out uncertainty about taxation and regulation and add into that, the interstate commerce could really alter the dynamics. That's kind of scary. Now, for those that are listening, I want to say there's been a huge positive this year. I talked just a few moments ago about the capital crunch that arrived at the end of 2019 during the vaping crisis. And this year, we're seeing, well, first of all, these companies took advantage of the price rise in the first part of the year and sold a lot of stock and really improved their balance sheet, which turned out to be really good. And I'm glad that happened. And the stocks went up after they sold that stock. So people that bought it had a chance to exit profitably if they wanted to. But what's happened that's very different from history is that we have seen a tremendous proliferation of non-equity capital available. We've seen several REITs go public, one equity REIT and 2 mortgage REITs with another one behind it, Chicago Atlantic and AFC Gamma. These companies, they're taking regular investor money and recycling it into the cannabis industry through either sale leasebacks or through mortgages or debt. And then we've also seen a big increase in the amount of debt capital available. So a lot of investors, it's a different group of investors. A lot of investors won't buy OTC stocks, or they won't invest in CSE listed companies, but they'll do debt. And, you know, debt's more protected than equity, right? So for whatever reason, you know, there's a pool of institutional investors that are putting money into federally illegal cannabis companies through debt. And this past week, I don't know when you're gonna air this, but in mid-December, Curaleaf closed the largest debt raise ever, 400 million at 8%. And then they have the ability to expand it by 200 million. And I think people that are looking at the stock prices are missing the bigger picture, that these things I mentioned earlier, New Jersey, New York, Virginia, it's all happening. And oh, by the way, Michigan is continuing to develop. I mentioned Illinois, new dispensaries there will help. Other states are expanding. There's other states that could go public, they could go legal. So whether or not we make any progress at all on federal legalization, or some of the things that could happen that fall short of federal legalization, still there's going to be massive growth. But a good investor would say, okay, but how are we going to fund it? Well, here's the answer. They've taken on this debt capital and they have access to sale leaseback. There are a lot of companies out there that are trading with $1 billion or more market cap that have done no sale leaseback. So that's still available. So I'm very encouraged as I look out about the American cannabis industry, as bad as it feels right now. That was a long answer. The short answer, as I said at the beginning, it's the total mirror of 2020. And just like things were crazy in early 2021, I was telling my subscribers that it's not sustainable. The valuations, the prices got to where I thought they should be 10 months later. And, you know, I'd say since then, the fundamentals didn't really change that much. We didn't see the revenue estimates go down or anything like that. So, you know, maybe you could argue that I had the wrong idea about what the valuation should be. Maybe, I don't know. But as I look out now, honestly, I think these stocks could double or triple over the next year without federal legalization. And I mean, just to wrap it up on this point, it wasn't that long ago that people that were going to invest in the space had to worry about potentially being arrested or having their money confiscated. That's not what we're talking about anymore. Now we're talking about being able to invest in companies that are cash flow positive, and where we have a situation where the federal government is trying to figure out how to legalize, not how to beat it back.
And do the debt vehicles sort of allow for you know, less scrutiny, as far as, you know, like the public companies are always focused on revenue and meeting their numbers? Does the debt give them a little more breathing room?
I don't think so. I mean, they have covenants and things like that. So no, I mean, I think it's actually the opposite. And it should be encouraging to equity investors. These people that are lending, okay, first of all, they are first in line. So let's just be cognizant of that. But still, these tend to be more conservative investors. And I mean, right now it's a pretty good bet because, you know, they're let's take Curaleaf. They have a 6 billion market cap. The market cap thinks they're worth 6 billion, and the lenders are the first 400 million. And you look at the EBITDA and things like that, it's certainly not onerous. It's not like what we saw in Canada in the early days when the companies had limited revenue, huge losses, and yet they were borrowing hundreds of millions of dollars. They had convertible debt. And I remember, I'm not going to name names, but I talked to the CEO of a major LP. I said, I don't understand why you don't just sell stock. Because why should we sell stock? This debt will end up selling the stock at a higher price. It's convertible at a premium. I'm like, but things change. And what happens if you don't? And he was like dumbfounded. Well, it was a disaster. And I don't have to name the company. It was literally a disaster for every single one of those companies. And now we have a situation where I'm sure most of your listeners here are familiar with Canopy Growth. And I've been watching that unravel for a long time, and have been very negative on it for quite some time. I think at this price, it's harder to be negative, and there's no liquidation event like maybe Hexo might be facing. But wow, when Constellation put all that money into it in late 2018, they had very limited debt, and they had like 4 billion. I don't remember off the top of my head the exact numbers, but they had a lot of cash and very limited debt. And here we are 3 years later, and they just had to do a fire sale on one of their assets. And so I may be wrong about my prediction that I've been making, but I've publicly stated that at the end of this year, 12/31, so it's not their year, but the year, Canopy Growth's debt will be bigger than their cash. That's not going to be true because they just sold their European pharmaceutical operation. So I'm going to be a little wrong, I have a feeling, but that's why they did it. They're actually facing funding problems. They have a lot of debt. They've never had to address their debt. Tilray had to address their debt. Aurora had to address their debt. Supreme had to address their debt. Organigram had a lot of debt. They did a strategic investment with British American Tobacco. Oxley has a lot of debt. They've done well in the derivative products, but they're trying to deal with their debt, and I don't think they've done it. We've seen a lot of companies stumble on their debt. So I'm very aware of this. And I think the US companies could get into a pinch, but it would require a regressive federal policy or something like that. The way things are right now, it's not a problem. Cannabis consumption's not going to drop. I mean, maybe people be wrong about it going up, but that it should. More states are legalizing, more municipalities are allowing. So I don't think that's a problem. And I think equity investors should be happy, A, because these conservative institutional investors, it's a second set of eyes, and B, it's reducing the need to sell equity. So,
and we saw, Canada was hot for a while, and then it sort of faltered. Then the US is hot. Are you seeing other areas that are looking to sort of emerge?
It's tough. And this is a question I've been thinking about for a long time. And I've told my subscribers, I told the public, I expected in 2021, the shift, not that people wouldn't care about the United States, but they'd be more interested than they've been historically in other geographies. And honestly, I'm not sure it's played out. I'll say, yes, this is true, but not to the extent that I thought. I mean, a year ago, I thought Mexico and Israel would legalize this year, and neither of those played out. They still could, but just like all things cannabis, things seem to take longer than we'd expect. But the Latin American companies that trade publicly, people got excited about them, and they lost this whole idea of, it reminds me of an old Seinfeld episode. Everybody wants to export, nobody wants to import except for Poland. Right. So I think, we've seen some very interesting things this year. I mean, first of all, back to Curaleaf, they made an investment in Europe. And most of the time when I've asked, or when at New Cannabis Ventures, we've asked in our interviews about, do you care about international? They're like, no, the US is where it's at. It's a huge market, blah, blah, blah. And some California companies, no, all we care is about California. So people have been very focused, and it was interesting to see Curaleaf do this. And so, and their timing could prove to be really good, right? I mean, with Germany potentially legalizing, I mean, they could be in a good position. So I think, people have been way ahead of their skis when it comes to international. And I think the best example is Germany. And I told people, the large LPs, if Germany is going to do well, would be the way to play it. They're there. It's an export, it's an import market. And that medical market's been very slow to develop, been a huge disappointment. And so So far being focused on international and not being more focused on just the US hasn't really been worthwhile, honestly. But I do think that's going to change. And I think Israel is a pretty promising market, especially if it could go legal. And there are a couple of names that trade in the United States, Intercure, which is CanDoc, and I Am Cannabis trade in the US. And I've noticed they've been doing well recently. And so a little bit of separation from the pack there. And I think that maybe reflects some of the underlying fundamentals and the rapidly growing Israeli medical cannabis market, but also the prospects for potential legalization. Who knows?
Yeah, we've had a lot of dialogue in the last couple of weeks around Germany, and the conclusion there is things will happen, but not unlike you talked about in the States, it'll take 2 or 3 years to kick in, even if they move forward.
Right.
So they do have medicinal. It's slow, but it's growing. There is the belief that they will have adult use, but nobody knows what that looks like, and no one understands, how to do that. They don't know whether or not this is going to be a dispensary model, whether it goes through, right now all the medicinal goes through the pharmacies, and that's the only place that is available. So nobody knows how any of that's going to roll out. So that's 2 or 3 years away, but it's a big opportunity. Germany is clearly the largest market here in Europe for cannabis. And the other thing that, what I've talked about, and I've gotten sort of, confirmation that folks agree, is once Germany goes, then you'll start to see the rest of Europe start, the dominoes will fall, right?
Can't say that about Malta or Luxembourg, but yes.
Well, Malta's moving, right? So Malta is,
but I mean, who cares, right?
Yeah,
500,000 people.
Yeah. I mean, I think that's maybe the challenge with Israel. Like, is Israel a big enough market?
It's like 8 million. I think it's a big enough market.
Yeah, but we look at Germany,
9 million.
Right? So
what's that?
I said we look at Germany as when we.
Right, I agree, but I mean, look, in the United States, that would be a decent sized state, actually. So I care about it.
Yeah. Yeah, I mean, and the thing is, Israel is always big on technologies. So they're forward thinking on the research. So they've been doing a lot of research for 30 years.
Yeah.
So when they do come to market, they'll be prepared. Right?
Yeah.
So what are you excited about in 2022, and what are your concerns about 2022?
Yeah, I'm always excited and I'm always concerned. So that's a good question. And
probably about the same things, right?
So I think there are a couple of things that excite me, but I'll get to the concern first, and I'll come back to the excite so we can end on a positive there. So I think where we are right now with the cannabis stocks down a lot from their peak and even down year to date substantially, and many of them in a bear market. I mean, Canopy Growth just printed took out its March 2020 lows, for example, and that's a big stock. So I am concerned. So why this is happening right now, I think is a number of reasons, some fundamental. We kind of touched on some of those, but there's a big technical right now. And that is, I'd call it three different things that are impacting the willingness of people to buy stocks right now. One would be tax loss selling, and that goes away December 31st. There's another concept, window dressing, which is, and this really hurts U.S. ancillary companies and the large Canadian LPs, because these are owned by institutions, and you don't look very bright right now, showing your investors that this is what you're holding. So I think some of them have been selling or certainly not adding to them. They don't want to look stupid. So, and then the third part is, the hedge funds do tend to be active in the space, both from a long and short perspective, to be fair. But I think they take their risk levels down at the end of the year. Typically, if they've had a good year, especially, they don't want to risk their performance payouts and things like that. So nobody wants to make a huge bet in the middle of December, which is when we're interviewing this. So what I'm concerned, I think a lot of people, including myself, are excited about 2022, and we kind of expect that this technical is going to go away and things will change. And I guess what I'm concerned about is what happens if things don't. And the good news is these companies for the most part, don't need to sell equity. So it's not like this is a near-term problem. So that is a concern of mine right now for the people that follow me, because a lot of them are investing right now, and I don't like to see them lose money. And I think so. My number one concern is that this market that we're in just keeps going down, even though I don't think it should. So what am I excited about? So a couple of things. The first one is easier, and we've already talked about it. And I think, sometimes people forget that every market in the United States is different. So for instance, when Colorado legalized, it meant literally nothing to the publicly traded stocks, because remember, those were scams anyway. None of them were doing business in Colorado. So that didn't even exist. So, okay, that's easy to understand. Well, what about when Washington legalized? No public companies were allowed. Actually, in Colorado, no public companies then were allowed. So, all right, well, what about California? And that was really funny. You had Canadian LPs going up because California was literally opening the doors on January 1st in 2018, right before Jeff Sessions pulls the rug out. Wasn't that long ago. Do I have my year right? Yeah, I do have my year right. January 1st, 2018, so 4 years ago. And but people don't remember that there really weren't American cannabis companies in California. They were waiting, they were being patient. And then you get a state like Illinois, which has a lot of public company participation now, but at the time, GTI and Cresco were really the only ones. And so what we've seen is, these public MSOs east of the Mississippi are very big. And so you get a state like New Jersey, it's literally almost 100% public companies at this point. And so I think the actual go live date for adult use in New Jersey is going to be a big deal. Not the type that brings in investors left and right, but something that gives conviction to those that follow this space. And I think it's going to be important. And I remember from a previous life, Whole Foods didn't strike me as a particularly attractively valued stock, but it was a good company many, many years ago. Now it's owned by Amazon, of course, but I just want to reference, I'm talking about a long time ago, and they opened their first store in New York City. And all of a sudden it was a game changer. And I didn't think about it in advance, but you had all these New York analysts, Wall Street analysts, they're right there. They walk into the store, they're blown away. They raise their target price and all that. All of a sudden it's like, aha. And so I think, in New Jersey, when people see the lines, people driving across the bridge from New York and what have you, it'll be in the news. I think some new people will get attracted to the space again. And I think the existing investors will have some relief. So, and it's not just New Jersey. Next year it'll be Connecticut and New Mexico. I don't think those are as impactful, but still, that I'm excited to see this develop. There's some other states that could legalize as well. And we can continue to see some progress. I mean, look, Minnesota is a small state. There's just one publicly traded company there, but they're going to add flower. They haven't had that. They're going to add edibles. They haven't had that. Just these incremental things get me excited, because from my perspective, the cannabis industry's never been better, but the mood has maybe never been worse, except for, in that brief period of time from late September of 2019 into March of 2020, when things looked really bad. It's never felt worse than it feels now. Now, here's the bigger thing, and these are hard to handicap, but I think we're looking at very depressed valuations right now for American cannabis companies. And there are companies out there that I would imagine would like to be in the cannabis industry. Now, they can't. Let's face it, they can't. But this year we've seen a very unusual development, not that it's novel, because it's happened before. This unusual development started when Canopy Growth made an investment in Acreage, not an investment. They paid the Acreage shareholders for an option to buy the whole company. Stupid deal at the time, not so stupid anymore necessarily, just to be really clear, but they paid too much, probably picked the wrong company, all sorts of things. This year, Canopy put $400 million into an option to buy edibles brand Wana. This year, Kronos Group put $110 million into an option to buy like 10.5% of a private MSO that's supposed to go public, PharmaCann. So we're seeing this. We've seen Scott's Miracle-Gro create this vehicle, and they're going to do some of this as well. So there's definitely, there's been interest in the past, but it's accelerated right now. Layer onto that the valuations are really better than they've ever been. You could argue they were better in March, but you didn't know what the future was going to look like in March of 2020. So kind of with a confidence that the future is going to be brighter, and what you pay now to invest in the future, it's never been better. It's never been less speculative, I guess is a better way to say it. Never been closer to an investment grade investment as opposed to a speculative investment. So what I look forward to, Mike, is a company like Ambev or Anheuser-Busch doing one of these deals. So far, these deals have gone through Canada. There's no reason legally that has to happen. There's no reason a Diageo or an Ambev or any number of consumer packaged good companies couldn't do this type of thing with another company. And that would be a super catalyst for the industry, for Bud, which is the stock symbol for Anheuser-Busch, to get into Bud. It's what we like to say. So look, is this going to happen? It's hard to say.
Right. Could
it happen? I definitely think so. And, you know, on top of it, I have a theory that has looked wrong so far, but I put it out in public and kind of fell on my face for now, but I still think I could be right. And so Altria made an investment at the top in Cronos. And there's some interesting things about this. Number one, the stock is now trading very close to its cash value. Number two, the company doesn't burn a lot of cash or anything like that. So it doesn't look like a dumpster fire like Canopy Growth. They're very focused in what they don't do. It's a call option on biosynthesis, and they've got really their project in Israel. And believe it or not, they're doing better in Canada. They're actually, I believe, the 6th largest player in adult use in Canada. And this probably eludes people because they've done nothing so far, but in the last few months, it's really been ramping up. So you have a company with an exclusive right to do any kind of cannabis business that Altria wants to do, has to go through them. And they're tied to Gotham. Gotham's got their hands on all these assets, Ianthus and others. And so so the warrants are running out of time and they're way out of the money. I've gone on the record, and that's why I'm saying this. I think Altria is going to buy Cronos. Cronos has about $1 billion in cash right now. Altria has access to low cost debt capital. Altria is pretty much a dead company, selling tobacco. It's not a growth industry and nobody gets excited about it. I think it trades at a 9 PE and a very low enterprise value to EBITDA. I don't really focus that much on that company. But what I can say is it would be very easy for them to buy Cronos. Cronos only has $1 billion in cash. You pay a little bit more than that, you get the cash. And I think that Altria is in a position to do what I was just talking about. So we already saw Cronos put 100 million into PharmaCann. They could just buy all of PharmaCann with another 900 million, but Cronos can't do that. That's too much. It's too big of a risk for Cronos, because if you never federally legalize, then Cronos just is out the money, and the PharmaCann people are like, yay, we got all this money. So, and maybe there's some other way to structure it, like an option on an option or something like that. But the point being, if Altria is really committed to the cannabis industry, which it should be, and which it sounds like it is, then this is something I look forward to. Them buying Cronos Group and putting not $1 billion, but $5 billion into these types of deals that I'm talking about. And I think that would excite the investor base as well. And cannabis stocks are really attractively valued now. This is all lining up in my view, Mike.
Yeah, I mean, I think there's a lot of industries that, should they want to enter the cannabis space, this would be a great opportunity, right?
Yeah.
We've heard Amazon sort of support cannabis and support
Right.
a lot of that, and we never believe they do it out of the goodness of their heart. So
friend or foe, right?
So we assume that they're making moves, right?
Yeah.
Anybody in the liquor industry or the tobacco industry is crazy to ignore any of that. So
yeah.
We're surely going to see some of the other industries, they're going to enter the market by buying something.
Right. Well, we haven't seen big ones do it. I've mentioned a few examples. There's a company in Canada called Humble and Fume. They have a kind of interesting model where they are a big ancillary products distributor in both United States and in Canada. In Canada, they represent LPs in stores, so they're like a brand rep. So they kind of broker cannabis product sales, and they partnered. I mean, I'm not even going to mention the company. I never even heard of them before, but it's a 70-year-old alcohol distributor. Johnson is what it's called, Johnson Brothers, I think. But it doesn't matter. But a 70-year-old alcohol distributor kicked in, I think, $8 million with the ability to take it to 10 to get into California into direct cannabis distribution. So this is at a very small scale, but I think it supports this point of anybody that understands CPG, if they're in tobacco or alcohol, which is threatened to some extent by cannabis,
Sure.
Even if they're not threatened, there's definitely some overlap there. So it's a way to diversify and to grow. And we're going to see, I threw out Ambev and Diageo. That wasn't an accident, but there's a lot of other types of companies that I think will kind of put 2 and 2 together, that it's more than 2 and 2, it's 3 and 3 or something like that. So first of all, I really like this Nancy Mace legislation. Like, it's not going anywhere, but maybe it sparks the conversation. And the first thing I want to see is a Senate version of it. It's just in the House, which that gets us nowhere. Right. But her legislation was less heavy-handed on regulation from the FDA and less taxation, 2 very important issues. And I thought it was very thoughtful. I think that she is a lot of people kind of wrote her off, but she's a very thoughtful person. She has a very deep personal connection to both the use of cannabis as well as the regulation and legalization in South Carolina. So she knows what she's doing. And so I think when these CPG companies kind of listen to people like me, see people like her, it's like, wait a second, just a few years ago, we were worried about Jeff Sessions. Now we're like seeing this competition between the Democrats and the Republicans. And sure, it's going to take a while, but why not plant a flag now? We know now that the downside isn't there anymore. The downside of, hey, I'm Mr. Big or Mrs. Big CPG company, and if I take my $1 billion and do this kind of weird transaction, I may never see my $1 billion. And so now, not only that, they could go to jail or something. So now it's a totally different conversation. So you've got the federal backdrop is better. The valuations are low. The pipeline is very robust. So even if we don't get that federal legalization, the state-by-state expansion pipeline is robust. So I think it's all there, Mike. So
yeah, I mean, what's interesting, I was just thinking of, we were at an event about a year ago, and we were talking with a startup company, and then we were talking with a pharma. And when we're talking with the startup company, they're talking about months, like being able to look ahead 6 months, maybe a year. And when we were talking to the pharma, she was talking about a 10-year plan.
Right.
You know what I mean? So, and I mean, I think that is the big difference, because if the big players want to come in, they have a 10-year focus, or they have a much longer focus, so they don't need for it to happen tomorrow.
Well, and so it wasn't that long ago that the idea was, if you want to be in cannabis, then what you need to do is buy a Canadian LP. And so a couple suckers fell for that. Constellation and they didn't buy it, but they moved to control it. That was the way to do it. It's federally legal. You don't have to worry, as long as they don't violate any rules, you're fine. And that was a good model at the time. That's no longer a good model. There's no, look, the companies in Canada have had plenty of time to prove if they're good companies or not. And honestly, the largest companies haven't really proven it, right? And that's being nice, by the way. Yeah, so, so there's some small companies that I think have proven it, but you're not going to get a lot of bang for your buck there. But there are some big companies in the United States that they weren't capital markets phenomenons. These companies were essentially bootstrapped and raised and deployed minimal amounts of capital and got huge returns on their capital that have really proven themselves. And like I said, we have this revenue tracker, and there are 11 companies right now that have, I believe, $1 billion or more market cap. I think is the right way to say it. Maybe it's 10 right now. Things moving around, but I believe it's probably 10, not 11. But and these companies, I like some more than others. Some, they're different. Some of them are more retail focused. Some of them are willing to take lower margins to be in places like California and Michigan. Some of them are more wholesale focused than retail. They're all different. The leaderships are different. So I don't know who they would like the most, but I could take a guess. And I'll throw one out. So Planet 13 is a company I followed for a long time, and what I think would appeal to a company, and I don't even know if I talk about some things, I don't research them, but conceptually, Hard Rock Cafe. Wow. I mean, they used to be anyway, a cool company. I don't know what their financial status is now, but that's the kind of company I can imagine them buying. That has these superstores, very tourist. So I don't want to predict that because I have no idea. But what I'm trying to say is there are different types of companies. That one trades below $1 billion, by the way, but they have substantial revenue. In some cases, in that case, profit or adjusted EBITDA profit. It's hard to have net income because of the owner's taxes, but still, I think that this is the time that these companies, given all these factors I just mentioned, this would be the time for these types of strategic investors to just go direct in the United States. And they have to be creative. They can't buy the companies because of federal illegality. So at least for now, if we get really lucky and the exchanges change their rules and allow these companies to list, even though they're dealing with a federally illegal drug, then that would be a game changer. Because then all of a sudden, if Diageo or whatever wanted to do it, I guess they could. They might not, because their own internal risk control might be a little bit different. Their views on risk, like just because you can do something doesn't mean you should. But in any event, if that happens, I think we're going to see that would be good. Forget the consolidation. It's going to be great if that were to happen. I didn't mention that as something really positive that could happen, just because people don't understand this. The exchanges are not prohibited from listing these companies. They choose not to do so. And I understand these exchanges are cash flow machines. Why would they want to do something that could totally kill the golden goose? So, but in any event, they have to get creative. They can tie these companies up in certain ways. I have an idea, which is like, take a company like Hershey's. They sue cannabis companies for knocking off their brands, right? Or what have you. Well, they could make a deal with MSOA. I don't want to name a name. And they could say, here's the deal. We're going to pay you through a convertible note, because they can't put the money directly in, apparently. And we're going to pay you X. It's a down payment. Then we're going to structure a takeout price based on whatever. It's complex stuff. But oh, by the way, you're going to start manufacturing Hershey's cannabis edibles, and you can't pay us a royalty, so you get to do it royalty free too. So I'm just spitballing like how this could play out, and I really think that's what excites me about 2022. I don't know how significant it's going to be. It could be more like this Johnson Brothers, small and targeted market, or it could be something bigger. And I sure hope the latter.
Because I remember like a year ago, Wrigley's was making rumblings, and I don't know that anything ever came of that.
Oh, Wrigley's was suing. So it's kind of funny because Wrigley's, Bo Wrigley runs Certera, or it's called Parallel now, sorry. Parallel. And it was kind of interesting to see Wrigley's. I almost thought like, okay, he's just trying to corner the whole market himself, and he's going to put everybody out of business with Wrigley's doing that. I don't know if he has any control over Wrigley's at all, exerts any influence. But there's been litigation there as well. So anyway, there's, low valuations, strong growth ahead, creative minds. These things can yield some positive things, Mike.
We very much appreciate your time today. If people want to learn more about what you're doing, where can they find you?
Always at my desk, but I don't think that's what you're asking. No. I work long hours, so you can find me all day at my desk. Ask my wife. But so 420investor.com, 420investor.com will take you to a landing page where it talks about that product, and you can learn more about it. And if you join, then you can access the product. But if you want to learn more about me in a very easy way, www.newcannabisventures.com. And what you can do there, we have an app. You can, if you like news apps, you can download our app, and that's free, of course, and you'll get all the news. And then you can also sign up for that weekly newsletter, which comes by email. And you can always access the newsletter on the website as well. But that's the best way to find me, and you'll find my Twitter and LinkedIn and all that through those venues.
Again, Alan, we appreciate your time. We enjoyed the conversation. We will check back with you in a year and see how those predictions worked out. And we look forward to more conversations.
All right, great. Happy New Year to you.
You too. Thank you very much.
All right.